There's no surprise today, the citizens around the world are actually fed up with the political systems. Again, not only those in America, but also around the world. The question that we really need to ask, what is the future for the politics? Is it about the political polarization, or is it just about the power shift? But meanwhile, we have been talking about the relationship between politics and economy for so long. Today, 2025, when we look at the global economy, especially we look at the trade relationship, people are even more concerned about the future. Now, at this moment, how much do we know about the global economy? What can we expect for the near future? And what about the powerful players? The US, China, even some of the bigger players in Europe. What can we expect the reactions among all of them? Well, ladies and gentlemen, it's my great honor to invite our distinguished speaker, who is the Professor Otaviano Canuto. Professor Canuto, based in Washington, D.C., he's a former vice president and a former executive director at the World Bank. He's a former executive director at the International Monetary Fund. And lately, he came out with this brand new article, The Global Economy, It's on a Two-Way Track. Well, Professor Canuto, and welcome to The Missing Piece.
It's a pleasure to be with you again, Will.
Well, again, Professor, such an honor to have you on our show. As I mentioned before, people, especially around the world, are fed up with the politics. We know it's complicated, and we know there's no easy way to understand that. But for the global economy, I want to start with the article. This is what you wrote, and I quote, "Global economic growth has been more resilient than expected, as the artificial intelligence-led growth seemed to be compensating for the negative impact of the trade conflict." Professor, I don't want to be so pessimistic, but when we look at the word resilience, how do we understand that today? And why do you say the global economy has been more resilient than we expected? Because we're seeing this economic gap, we're seeing this the wage gap among some of the countries are very concerning. Where does that come from, and how do we understand that?
Right. First of all, this resilience is a feature so far, and as compared to what many people, institutions, and myself expected. Because on the one hand, we have had Mr. Trump's tariff policies that, as expected, represent a downward push, not only in the U.S. economy itself, but also to the rest of the world. And indeed, things have been exactly as such. If one look at the dynamics of jobs creation and so on, it has already reflected this downward trend. On the other hand, one must recognize that the impact in terms of GDP growth has been a little bit less bad than expected. And as I highlight in the article, I use the forecasts by the OECD as well as the quarterly report by the Bank for International Settlements, the BIS, to highlight how, well, there has been this small little surprise upward. The OECD, as compared to its latest report of June, it increased a bit the expected growth, and they gave an explanation to this. First, there was an anticipation relative to the tariffs and a front loading of imports of purchase by U.S. companies and so on of imports, and that, let's say, pulled up a bit the industrial production on the rest of the world particularly in the first quarter, less so in the second quarter of the year, but it's true that gave an impulse. Problem is that once this anticipation ends, things normalize downward. But it helped the GDP growth in the first half of the year. A second point highlighted by the OECD report in particular was the fact that the fiscal policy in China uh, compensated a bit the downward impulse coming from lower exports from the trade war. And third, and that comes what you mentioned, the AI boom, the artificial intelligence boom, is still on in the sense that there has been so much money coming from all over the world to buy equities of the Magnificent Seven enterprise. And this has been accompanied by a strong investment, a strong creation of investments in data centers. And
Hmm.
those investments in data centers have, let's say, maintained the pace of economic growth in the US. It all depends on those investments, right?
Hmm.
So, in balance, this is how to understand this resilience of the global economy, of the US economic growth, and given the size of the US economy, that impacts the whole world, right? And so it has to do with this boom. Now, when I said for the time being, it's for one single reason. First of all, this investment in data centers will, reach a limit at certain moment. And second, uh, the asset values of these companies are clearly overstretched.
Hmm.
And the BIS report highlights quite well how the valuation of these papers and the have gone so far high that when one looks at the relationship between the ratio of the price of these assets of those shares and the earnings of the company, you see how stretched are their values. And obviously, no one has the answer to the question that I'm going to make, because otherwise, if anyone had, that's a $1 trillion question, right?
Hmm.
Which is the following: will the AI boom in terms of equity prices become an AI asset bubble to
Hmm.
reveal itself and markets when it comes to bubbles and valuation. We have a long history in mankind in capitalism of
Hmm.
bubbles that are created, and so people look at the valuation of assets and say, "Wow, this is going too far. This is too much." But uh, if I don't get in, I will lose the chance.
Hmm.
And that feeds up the process. Is see, we saw uh, asset bubbles since the times of the Dutch proeminence in financial markets, when we had the tulip bubble, when suddenly tulips, the tulip seeds got so much value that they were worth the price of a house.
Hmm.
Okay, and that at a certain time exploded, and that's why it became famous as a tulip bubble. I would strongly recommend a book written by Charles Kindleberger that was published in 1975. Look at this, 1975, and he
Hmm.
looked back at history and examined several of those episodes in financial markets in advanced economies. The name of the book, the title of the book is Manias, which is the moment in which the optimism is thrown in, panic when everyone tries to let's say, to run from the mania and crashes, which
Mm.
follows exactly when everybody tries to sell the assets to make up the expected gain, and then things crash. And he approached in his book not only the tulip mania, but also the uprise of share prices in the 20s, in 1920s, which ended up leading to the 1929 crash in the New York, in the U.S. Uh, 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 shares and so on. And then he approaches other episodes and so on. So, but his book was 75. And after his book, we had a debt bubble, including Asian countries. In the 90s, we had the debt bubble of Latin America and the Caribbean, particularly Latin American countries in the 70s that sparked that exploded in the 80s, and we had, and this one matters, the dot-com bubble in the beginning of the 90s in the US. And I highlight the dot-com bubble because we might be seeing something exactly similar right now with the AI. And it's worth explaining this a little bit more further. See, uh, dot com bubble was related to internet, when the internet came and
Mm.
so on. And some of these companies that are today at the forefront benefited, and and the impact, the effects of internet on the economy and on life uh, have endured. But nonetheless, the gains for the companies in terms of earnings were not commensurate to the levels of appreciation of share values. At a certain moment, when the bubble imploded, the companies survived and so on, many of them. But the fact of the matter is, and the results in terms of internet advancement, uh, where they're at the base of what we're doing now and so on. But the fact of the matter is that the valuation during the upward phase of price was too much to weigh
Mm.
of the earnings by the companies. Now, we might be facing a similar thing now in the following sense. It's obvious that the effects of AI in terms of productivity increases. It has its risks, as we know, in terms of employment, in terms of it's not clear as of now how much the impact in terms of job creation and job destruction by AI will play out in the economy and so on. But the fact of the matter is that the effects in terms of potential effects in terms of increasing productivity are beyond any doubt.
Mm.
Now, whether that will translate into earnings for the Magnificent Seven, let's say, commensurate with the degree of valuation, this is something really completely unknown. It is not easy that ChatGPT or an OpenAI or NVIDIA more because it's semiconductors that it sells, or also seeking alpha and deep seek, how their results in terms of increased product, making possible the increase of productivity by users will translate into gains to them. So
Mm.
uh, to be seen whether the dynamism of related to the AI, that is to say, including the investments in data centers and the results in terms of productivity, will translate into earnings.
Mm.
Now, having said that, even if uh, this dynamism of AI has, in macroeconomic terms, compensated, at least partially, the negative effects of tariffs. The negative effects of tariffs are still in the beginning. That's what I wrote in another piece, that the tariff saga has not reached its peak yet. Only now we are watching the effects in terms of price increases in the U.S. Only now we are, I found quite interesting that the Federal Reserve Bank of New York released last evening the results of their surveys of expectations
Mm.
by the families in the U.S. And clearly, there has been an uptick. The Americans are expecting inflation moving up to 3% more, 3.4%. They're not expecting their income to nominal income to accompany that inflationary rise. So they are expecting a decrease in their income in real terms, and they also have become more pessimistic with respect to the job market, with the creation of new jobs and finding new jobs and so on. So the effects, the negative effects of uh, of the the tariffs are still beginning, whereas the compensation on the AI side, nobody really knows how long it's going to remain.
Mm.
That's right. It's a two track, but uh, keeping an eye on the fact that there are limits to which the asset bubble or asset boom, okay, let's stay on asset boom, can remain compensating the negative side. And well, unimportant. Let me go over this. The political polarization. Uh, the problem is the following: globalization was pretty good, fantastic in terms of poverty reduction in the world, in terms of decreasing the difference of per capita income among countries. China is the best example in that regard, who used well globalization exactly to ramp up and so on. And whereas on the side of the advanced economies, and that applies particularly to the US, the gains from globalization were particularly accrued by the upper echelon of the income pyramid through sophisticated, service, through asset valuation, and so on. Whereas the median and the low to middle to low ranges of the U.S. population have had their income reasonably stagnated or not growing very much.
Mm.
And one can see, and the article brings the figures on the difference between wealth evolution and income evolution. It's incredible how wealth rise in the U.S. relative to income, and this has led to a disappointment by low and middle classes in the U.S., and that applies in other parts of the advanced world as well. With the elites, with and of course, some politicians have been quite smart to exploit that. That's how Mr. Trump won his first election, and definitely that's how he also won his second election,
Mm.
by promising to these people, renting against the elites, the globalized elites, to use the language of the Steve Bannon and the extreme right, those globalists, who don't care about you, you poor, you local people. They're only interested in their gains in exploring the global economy. And I'm going to offer you that I'm going to offer you not only a protection against those globalist elites, but also, you know what? We're going to make America great again. We're going to rerun to the past. We're going to get back to that time in the 70s and 80s when you had, you were in a much better position and so on. And this has worked out politically. That's how the extreme right and the right have risen against globalization, and not only in the U.S. but also in other parts. It was the major factor behind the success of the Brexit campaign. You put two things: you put globalization and goods in China, blame China, right? And you also put the immigrants. Well, these immigrants are coming and reducing your negotiating power in terms of wage and so on. So and to a large extent, the Brexit in the UK in 2016 won because the corresponding leaders who are now particularly close to Trump and so on, they got Farage and so on, put the blame on the Eastern European immigrants that started coming to the UK because the UK was part of the European Union. And by the same token, in France, my wife is French, and we travel there very often. And you can see as well in some parts of France this myth that the hardship that the lower part of the population are going through as due to uncontrolled entry of immigrants and so on. So this is a general phenomenon in Austria and well, even in some Scandinavian countries, you have seen the rise of this sentiment. No, and that's how Mr. Trump won the two elections, make America great again. And the worst of all is that he's selling an illusion because the tariffs that he has implemented will not create, will not be able to return the U.S. economy to the past where it was. There's no way. Technology has changed. The steel mills, well, even in China, was a champion, has become the champion on manufacturing. The figures already show how the employment in manufacturing is decreasing started to decrease relative to the other occupations. Technology has made manufacturing less job intensive. If you want to have job creation in the economies, in modern economies, it is mostly in the case of economies that are already up there in service and not necessarily manufacturing. So Mr. Trump has sold an illusion that it's possible to recover the manufacturing jobs. While this is not possible, not only because of the advancement in the rest of the world, but also because technology itself has evolved in that direction. And interestingly, in my article, I replicated the results of a survey made that appeared in an article that I quote there at the Financial Times, a survey with the Americans about the manufacturing jobs. And the majority of the population, particularly the Republicans, say yes, more Americans employed in manufacturing will be good for America. And then the second question is, would you be willing to become a manufacturing employee? And the answer is no.
Well, I mean, Professor Canuto, it's fascinating and it's engaging to understand that how we view this global economic growth. I mean, again, it doesn't matter where you stand. It doesn't matter what politics that you belong to. It's fair to say that everyone is hungry for the fairness of this economic agenda. And so that's why I strongly encourage everyone go online to check out this amazing article. It's called The Global Economy. It's on a two-way track. Again, such an honor to have Professor Canuto on our show. And again, ladies and gentlemen, Professor Canuto is based in Washington, D.C. He's a former vice president and a former executive director at the World Bank, a former executive director of the International Monetary Fund. And I strongly encourage everyone to go online to connect with Professor Canuto.
And currently at the Policy Center for the New South.
There you go. Absolutely. Again, Professor, thank you so much for your time. We'd love to have you back on the show as we continue to pay attention to the global economy. And also, please let us know your latest publications. So thank you so much for you sharing.